Hello, everyone. Is Paul Stevens, and welcome to this short-term rentals webinar on M&A vision: who, what, where, when, and why, sponsored by Key Data and Logify. I'm the editor of Short-Term Rentals here at International Hospitality Media, and I'm the host for today's session. Before we begin, let's introduce our first webinar series sponsor, Key Data. We can see a few details about them here, and we've also got a quick intro video to this short-term vacation rental data provider.
It's actually helped us increase our revenue, because what it allowed us to do was look at, for example, as an example, a two-bedroom property in a specific area, and look at what the benchmarked ADR is for that and what the occupancy is. And we found that in some areas our ADR was actually less than the market average.
Big thank you to Key Data for sponsoring this session and our webinar series. And next up, we have our second webinar series sponsor, Logify.
Try Logify and increase the revenue of your vacation rental business. Create your bookable vacation rental website. Select a template. Upload your rental information and share it with the world in minutes. With Logify, you can connect to booking portals, manage all your reservations, stay in touch with your guests, and automate time-consuming tasks. Go to logify.com and grow your bookings today.
And a big thank you to Logify for their sponsorship of this session and our series. So we've got a cracking speaker lineup for you today. I'm going to get them all to briefly introduce themselves. We'll start off, please, with Philip, as he's on the left.
Yep, perfect. Hi, everybody. Thank you very much, Paul, for inviting me to this panel. My name is Philip Rowider. I'm the Director of Real Estate at Numa. For those who don't know Numa, Numa is a short-stay service apartment apart hotel operator founded in 2019 with currently over 8,600 keys under contract across Europe, targeting prime locations in the best neighborhoods of Europe. We are a strong believer in travel, a strong believer in hospitality, service apartments, and technology. In our real estate investors include the likes of Invesco, Deca, Patrizia, LaSalle, just to name a few. We've also been relatively active within the M&A space, having to date acquired 3 platforms, Friendly Rentals in Barcelona, Yace in Amsterdam, and most recently Native Places in the UK. And we're looking to complement our organic growth with strategic acquisitions. And we think this is a very dynamic space in which we'll see further opportunities and transformational changes in the years to come.
Excellent. Thank you, Philip. We'll be certainly covering a number of those acquisitions later on in the discussion. Next up, please, we have Morgan.
Hi, everyone. I'm Morgan Lenné. I'm an investment banker, but I'd say more an entrepreneur in finance. I co-founded the firm 20 years ago. Now we have a team of 60 people spread across Europe, Paris, London, and Madrid, where I live. I myself specialized in travel tech about 10 years ago, and I spent most of my time advising companies, growth companies in general, with a tech component in the travel tech space. So my team is roughly 10 people out of the 60 that we have in the company. Very happy to meet you. I don't do miracles, but I'm always happy to find solutions for capital strategies of entrepreneurs.
That's good enough for us, Morgan. Thank you very much. Next up, we have John from AGC Partners.
Thank you. So like Morgan, I'm an investment banker. I'm a partner at AGC Partners. We're a boutique based out of Boston. We're about 75 people, offices in Boston, New York, in London, with a number of partners throughout Europe. I head up the travel and hospitality business for the firm, which is a big component of what AGC does. It'll probably be about a quarter of our business this year going forward. So excited to be here and to talk to you all about the short-term rental space, which is from our perspective, one of the big growth engines in what we're seeing in our space going forward.
Excellent. Delighted to have you on board, John. Looking forward to hearing your thoughts. And last but by no means least, we've got Richard from Yes Consulting.
Yeah, thanks, Paul. Thanks for inviting me. Yeah, I like to say I've been around the industry since the last century, but only 1999. So I've owned and exited 2 management companies. I've owned and exited a rental software business last year. And I exist through a small rental consultancy company, a bit like Morgan on a smaller scale. I work with companies on growth that involve technology as well.
Excellent. Thank you, Richard. And thank you to all of our panel. Really looking forward to getting this discussion started. Got just a couple of slides to run through quickly before we get started. So some webinar guidelines for today. Yeah. All of the details are going to be posted in the chat, so please do go there to ask any of our panelists a question. We'll have a panel discussion leading into audience questions, roughly around 45 minutes, and then a recording will be sent round to everyone within the next 24, 48 hours. Before we begin, let's look at the wider context in the mergers and acquisition landscape. Here are some of the most significant M&A transactions that we've seen involving operators and property managers, including Philips Numa's purchase of Park Hotel brand Native Places we saw there. Also some deals involving European Camping Group, and just a couple of weeks ago, Oyo buying the French property manager Check My Guest. Software and tech has also been a significant segment where a lot of investment is being deployed and the industry is consolidating, notably AirDNA buying Uplisting, TouchStay being acquired by the Czech group Trinity, and as Richard also alluded to, Situ acquiring the tech stack of Rentivo earlier this year. And finally, we'll of course refer to AI. What webinar would be complete without referring to AI, after Airbnb bought AI stealth company GamePlanner.ai last November. So we'll be really looking forward to discussing more with that. So when we talk about the time being right to sell or acquire businesses, I'm going to turn first to you, Richard. You've talked there about you've exited, I think, 2 management companies, and you've also had your rental tech business as well. I wonder, from your own perspective, what are the major tech verticals of interest for M&A and for the wider sector at the moment, do you think?
Yeah, it's interesting when you posed the question earlier. I mean, I often get quite confused looking at the spread of tech that's actually in the industry. So we probably have somewhere in the region of 600 or 700 tech suppliers. So it's I won't say it's a mess, it's a morass. And a lot of them are actually fighting for space, and they're fighting for customers, and they're fighting for money too. And they fall into probably 20 different sectors and amongst 4 major categories. And we all know what they are. They're the PMS, the guest service, they're the channel distributions, the payment solutions, and everything else that goes with them. So you've got a lot of small companies out there trying to accrue customers. And as you just showed, we sold our software at the end of last year to Situ, which is a service department company. Essentially, we sold it because it became too hard to accrue customers in the space we were in, and we needed a lot of money, and we got very tired. So this was a great concept to sell the tech stack. But there's a lot of that going on right now, and there's an elephant in the room as far as I'm concerned, and I have to keep rethinking this elephant, because the elephant is the PMS systems. And we know that there's been a roll-up of Inhabit and Guesty and Hostaway have raised lots of money, and Cross has been acquired, Avantio has been acquired. So we've got this firewall to bookings. We've got this firewall to inventory continuously. So we've got hundreds and hundreds of different services all wishing to have this information. I've been saying for a long time that I just can't tell you the amount of people who phone me up and say, I'm thinking of starting a PMS. And I always say, please don't do that. This is a crazy idea, you know. But I think there's a problem here. And before I head into where you're going to put your money, I think the problem is that a lot of these legacy systems now, they were never designed for what's coming in the future. And that brings me into where is it going and where would you put your money and what are you going to buy? So if you're a PMS business right now, you've got API feeds in from multiple services. They're taking a commission off them. They know what the money's being made. And if you're going to buy something, you're going to buy something that's already making money. You're going to take them out of the market or you're going to replace it. So look at the bigger ones, the bigger guest service apps, maybe insurance companies, things like that. They're the ones that are probably being scrutinized right now as a possible acquisition. But actually, I think there's another elephant in the room, and it's AI. And I think that's probably where people are going to start looking, because you're going to have a super layer over 20 different categories connected to one PMS to make sense of it. So I would actually think PMSs might actually be of interest, provided that they are on new tech stacks, future vision going forward. So for me, you're going to cherry pick the best small companies because they just want the customers. Simple as that.
You mentioned about there being 600 or so tech companies in this vast landscape. I mean, is that would you say, and maybe this is a crude question, is that too many? Because we've talked about how hard.
Well, personally, I think it's too many. Yeah, but I mean, it is a big world, and it has 200 languages, probably 30 or 40 which are mainstream. And we don't see a lot of these because they are very hyper local. But again, if you're the other gentleman on the call here, they're not probably looking at companies that are going to turn in 1.5–2 million, and it's a lifestyle business, and they're going to scrape money from the bank in the cold periods. Who's going to make the big money? And it's going to start at the firewall, and you're going to have to accrue customers. One thing I would not put money in, this is just my opinion, is marketplaces. OTA type, meta search engine type marketplaces. And it constantly amazes me how much money gets pushed into some of these peripheral ones and how they're ever going to turn a profit out of it. So yeah, cherry pick the small ones that are connected to PMSs, knock them out, accrue it, and grow. AI, don't invest in marketplaces.
Thank you, Richard. We will have a question towards the end about that, and hopefully we can get you to expand it in even more detail. I'll turn to Philip next as well. Thank you for that, Richard. Philip, you've come at this from sort of two different sides, where you've acquired businesses. We talk about Yays and native places we had in the context. You've also raised $59 million in Series C funding last September. I wonder for you, what are the verticals that you're most looking at with Numa when you're looking for future acquisitions?
So, I mean, in reality, being an operator, what we're looking for are other operators. And obviously the way these are being managed is you either have leases, management agreements, or similar contractual structures, which give you access and security towards properties, which we then can take into the Numa universe. I think in terms of finding the right target, it comes down to overall the strategic alignment between the target company as well as Numa, but also specifically two, or let's call it 2+1 factors, which are the main criteria. Number one, we look at barriers to entry. So if you look at the acquisitions we've done in Barcelona, if you look at the acquisitions we've done in Amsterdam, these are heavily regulated markets, and the question for an operator is how quickly would we be able to grow in these markets organically, given ease of access to the market. How quickly can you turn other properties into leases for Numa? And then how do we foresee the regulation in these markets to continue in the future? The second acquisition, Native Places, as we all know, the UK is a super competitive market. Again, there's high barriers to entry to grow organically. The second part we look at is value creation. I mean, what is the value creation that we can bring to the business through our systems, through our technology, and then obviously through the economies of scale that you have when combining businesses. And then the plus one part is in today's market, price. Because I think we've all seen the mega trends around hospitality. Is today a good time to buy or to sell? I think there are arguments for both cases. We believe there is still a good time to buy. We also believe that through the Numa tech stack and the Numa operating model, we can add value to any traditional operator. And ultimately, we think that there will be continued transformation, continued M&A activity within the space.
And I know that when you raised your Series C funding as well, that you said a key part of the investment was going towards developing your tech stack. So when you make future acquisitions, is this the main factor that goes into deciding those?
So I mean, when we look at other operators, we're not so focused on their tech stack. I mean, obviously, if they have a good tech stack, it helps the integration into the Numa environment. But in reality, the idea for most acquisitions would be to roll out the Numa tech stack and then continue benefit from the economies of scale, continue to benefit from the tech stack that Numa has developed, which is fully proprietary. And we believe that we can create value through the implementation of the Numa tech stack in the acquisitions that we've done to date.
Thank you, Philip. Let's head over to the investment side of things. And Morgan, with Campbell Partners, a very, very familiar name for a lot of people in the space. Even just in my research preparing for this webinar as well, I was looking at the types of investments that we've covered. So, for example, there was a merger of Yescapa and Gabuni, so looking in the micro-mobility and the RV space, a growth capital raise as well for Le Collectionniste, a booking platform in France. You've also been in the camping and glamping space as well. Avantio selling to Planet. Lots of transactions, both mergers and investment side. From your perspective, Morgan, where and what category is the biggest opportunity to really build both a stable and a profitable business to create value?
Well, I think more than a category, it's I'd say a level of maturity of companies. I think you can sell pretty much any company, but I think people often get it very wrong about how much money they can really make in a market that is overcrowded. I was when Richard was mentioning like 600, 700 tech suppliers. That's really a lot, and there's not going to be a big check at the end for most players in the market. So rather than purely saying like you should go in, like, of course revenue management is something very interesting. Everything that touches the revenue and the optimization of the revenue is something core to the user. I think this will be a protected space, but I think more than a category, I think it's a level of maturity. I think companies that are able to grow while being profitable are the ones that will first survive and eventually trade at a relatively a good multiple. The rest is going to struggle, and we see a lot of transactions that are failed or struggling. So it's not because you see a lot of M&A in the press, and you've mentioned a few. There's a lot of activity in the M&A landscape, but it's only a handful of companies that get to this stage, while most companies are like struggling to survive, and it's very likely that we'll see a lot of them disappear in the coming year. So I'm still very optimistic about our business of intermediation, helping companies find a buyer, or sometimes helping companies find a target. But we'll never be able, even if John and I or very, very convinced about the industry we're serving, we're not going to do 600 deals for sure, like a deal per supplier. So if we do 10 deals a year, each of us, it's going to be like the maximum we can serve. And I think we are probably amongst the most active in the industry. So we're talking about less than, potentially less than 5% of companies that will eventually trade. So that's for me, that's the signal. So again, I would urge entrepreneurs or founders of CEOs to really be very disciplined about how they manage their business. And I think only a handful of companies can afford losing money and still be able to find money, to find new financing. So I think the new era is really on rule of 40, rule of 50, rule of 60 companies. Companies able to grow, not necessarily highly, but while being largely profitable. I think for me that's the new normal. So rather again than a category, I'd say the type of companies that will eventually find money or trade will be the ones combining growth and profits.
Thank you, Morgan. John, I'd love to get your perspective on this. You're focused very much on sort of the mid-market M&A, I believe, and growth equity finance.
Mm-hmm.
What's your thoughts there on what Morgan said and what opportunities you're seeing?
Well, I think I'd start with I agree with everything that Morgan said. The asterisk that I would put on it is the areas where we're seeing companies grow the fastest are really two areas. One, more full stack type solutions. And so you're thinking about companies that integrate the PMS with the RMS with the lead gen functionality. The further you can go into serving the whole set of needs for a client, I think that the more ability you have to scale quickly and ramp up quickly. And part of that, has to do with the type of client that, where the expansion opportunity exists. It's at the seam between what I think of as the traditional lodging market and the vacation rental market. What the lodging market would look at as more of the long tail, the vacation rental market would look at as being more of the enterprise side of the market. Those are players that for the most part don't have fully built out tech stacks. So if you think about platforms that, like a Guesty or like a Cloudbeds that are stepping in and saying, listen, we're going to offer you functionality on a modularized basis. You can turn on what you want, what you don't want from our product. But, more and more what we aim to do is give you a one-stop shop solution. I think that's where the industry's headed right now. To the point that was made by Richard about the 600 or so vendors. Listen, if you're buying a different software for every single function that you need, your guest messaging, your RMS, your PMS, your housekeeping, it's too many things to keep track of. So you need a solution that simplifies that all and takes it from products to platforms. I think that's where the industry's going. The second piece of that story, though, is where investment dollars have flowed has focused on the PMS because it's a system of record. It tends to be the lowest churn software that we see. I think that the better bets going forward are going to focus on the marketing stack, and they're going to focus on driving direct traffic. And it's going to be true in hotels, and it's going to be true in vacation rental as well. But short-term rental as well. It's all about driving direct traffic to these platforms because there's so much money that goes to Airbnb and Booking that doesn't need to go there.
Thank you very much, John. Some really good insights there from all of you. And I would say we're starting to get a couple of questions in. We'll try and answer those towards the end. So please do post your questions, whether you're considering acquiring businesses, selling, raising money. We want to hear from everyone.
Can I just ask John a question there? Because, my mind's in exactly the same place as him in terms of, where the opportunity is in terms of consolidated platforms. It makes so much sense to do that. But I mentioned earlier this AI super layer. because you're going to be able to remove staff. You're going to reallocate them to different hospitality functions. But there's going to be finance, administration, sales. You're going to be able to augment everything with inspection reviews, automation, operations, and everything. Where do you see the AI part of this sitting on the systems?
I'm probably going to annoy some people when I say this. I think AI is going to be part of something that everyone does. And it's not necessarily going to be AI-specific platforms that are going to be the winners. Yes, those are the folks that are raising a ton of capital right now, particularly hot money out of the Bay Area. You're going to have some winners out of the pure AI plays, but the platforms that are going to win with this AI super layer, it's going to be companies that have been doing AI for the last decade and just not talking about it in the parlance of AI. I think those will end up being the big winners, because let's face it, AI as a thing became popularized in the last 18-24 months with some of the consumer-facing AI applications, but it's been the driving force behind a lot of innovation that's been happening across different pieces of softwares for the last decade.
Yep, I'm with you.
Thank you, Richard, and to John as well. Really good to hear from that. And I'm sure we'll probably be touching a bit more on AI before the end of today's webinar. We've touched a lot on software and tech so far, so I want to go back to property management and inventory. Philippe, we mentioned you've acquired several different operators already, and you're very much in the urban market. I wonder from your side, do you think the urban inventory in the future is going to be dominated by players like Numa, the larger players and well-funded players, compared to some of these more lifestyle Airbnb type management businesses? I wonder what your thoughts
are. I think in reality, if you look at the fragmentation of the market today, I think we're far away from a dominated position, because across Europe, on average, more than 80% of the market is still being run by mom and pops. So it's a super granular market, and I think domination, even if you look at the traditional hotel space, is nowhere on the horizon. At the same time, if you look at in particular, the service apartment space, the mid-cap space, the professionals, we believe consolidation is inevitable. I think the sector is very much driven by growth, and some might even argue it's a case of eat or being eaten. And we think we will continue to see the consolidation in the market. And as platforms grow, you obviously get the economies of scale within the operating business. You're able to provide a bigger platform, not just to guests, but also to real estate partners, which then helps you build that covenant that everybody is looking for in terms of size and profitability. And then on top of that, I think we also need to consider that the market itself continues to be more and more regulated. I think we've all seen the news, how hospitality is viewed by a lot of cities, a lot of countries. And I think anything that's not cookie cutter legit over the next 10, 15 years will probably be over-regulated by the various cities, towns, and municipalities. If you look what's happened in Barcelona, if you look what's happened in Amsterdam, if you've been reading the news about what's happening in the Balearic Islands. So we think there's going to be a continued regulation. And in short, I think the consolidation will continue in that market. I think there are well-funded, well-run players out there who will continue to pick up portfolios here and there. But I think overall, we're still far away from speaking of a domination in the market.
It's interesting. Numa calls itself a digital hospitality platform. You don't necessarily call yourselves, definitely not short-term rental, but also sort of a hybrid between short-term rental and service department. Would you say you're not looking to dominate a space, but are you looking to cover yourself across multiple hospitality real estate verticals?
So in reality today, I think the reason why we call it platform is because we try to run it like a platform. We are a hospitality operator today. We can run apart hotels, we can run service apartments. We have traditional hotels in our portfolio. The largest property we have is 260 keys. The smallest one is 15 keys. We're operating properties from Portugal all the way to Norway down to Italy. And we very firmly believe in the space of hospitality and travel, and obviously tech, because unlike many other industries, I think most of the hospitality space still somewhat stuck in the 80s. If you look at traditional 3-4 star hotels, the tech experience that you get in some cases is reduced to on-demand TV, and maybe you're lucky to get a webcast. But everything else, from the check-in experience to the guest communication to the follow-up, is still very much done like it was 10, 15 years ago. So in that sense, we consider ourselves a platform, and we try to roll that platform out across different markets, different properties, with like-minded investors.
Thank you, Philippe. If we move from the urban to more of a leisure side, Richard, I think you're perfectly placed to look at this. Where do you see some of those larger, well-funded companies, the likes of Aways and Sykes and Travel Chapter, going more to?
It's a really good question, and it's kind of more my space. So I've been in the leisure management companies and sold a couple, and also helped a few other companies sell recently as well. And I'm really looking forward to what the other gentlemen on this panel have got to say about this. If I just give it a little bit of background, because I'm sitting in the UK, and cottages.com Aways, which was the Wyndham inventory, probably 23,000 properties, Sykes 22,000, but I think they quote 31,000 because they got 6,500 caravans and forest holidays now as well. Travel Chapter, Original Cottages, they're up to 15,500 properties. They all make money by the looks of it, and I think we've also got Interhome.
Lots of money.
Lots of money, yeah, over in Switzerland, up for sale as well. And they're selling their hospitality portfolio. So they're making money. They don't seem to be growing much over the 20,000. The churn, we know, is pretty substantial on most of these companies. And they do breed mushrooms. So a lot of the staff leave and start up again, and they end up with properties with like 100 properties, and with the vision that they can yet again recapitalize their investment on small companies again. We've got a big problem right now in the UK because they got this FHL, finished holiday letting issues, that the Conservative government brought up in the budget last year. It's now been followed up by the Labour government. So there's quite a lot of nervousness around that, whether it's going to be implemented. My guess is it will be implemented, because the Labour government's making hostile attacks on virtually everything. Politicians are making a lot of noise because everybody's homeless and no one can afford houses, and there's not enough residential letting. So the climate's actually pretty bad at the moment. Plus, everybody's disappeared off to Spain and Portugal and Greece and everywhere this year, and I think tourism's down like 15%. So what's going to happen? I think what's going to happen is we're going to lose a certain amount of inventory, and that means there's going to be bigger churn in certain areas, and we're not going to see very much growth. So I don't know what's going to happen to these companies. Maybe, and this is a crazy idea, if the two or three of them got together, they'd actually have 75,000 properties, and they could probably then breach some new barriers as well. But whether that is a sensible financial proposition, it's better for the other people on this this panel to actually talk about it. But I can tell you, they do make a lot of money, but they have investors, and the investors want a return on this right now. Well, they must do by now, I'd have thought. But somebody else answer this. Who is likely to come in, and what are they likely to do? Because right now they're being nibbled at continuously by the new mushrooms.
Should we turn that over to Morgan as well? I guess in terms of models there, what's appealing to you right now?
No, I think to Richard's point, I think one of the and I do agree with some of the big players that are seeing some of their supply disappearing. This is, I would say, this is accelerated or natural erosion. I don't know, but it's going to be a tough one for the investor that have been backing at a very high multiple, high price a couple of years ago at the peak of the valuation bubble, to see some interesting returns. So we might see some disappointing returns on those large M&A or private equity deals. That's my provision. But once we've said that, they won't have a choice. They will have to exit. So we will see probably two things. First, the big players are going to have to rebuild supply through small acquisitions, right? So we'll see some continued activity on the small acquisition side. So if you're, I don't know, a property manager with a few tens, few hundred, few tens properties in a specific area of a certain geography, or serving a certain layer of population of customers, you will have a buyer, but this buyer will come at a very reasonable multiple. So it will always be like in the range of, I don't know, 5 to 10 times EBITDA, and probably closer to 6 to 8 maximum. So it might leave some of the investors who have been backing property managers, even the tech ones, the tech-enabled ones, at high multiple, thinking they would get some tech multiples behind, with a very disappointing return. So, but that's life. I think people got it pretty wrong at some point on how much money they could really make in this industry. It's not a poor industry. I think it's a rich industry, but it's a traditional industry when it comes to valuation. So I think the mirage of those tech-enabled companies will probably very soon turn into probably it's a moment of, it's a wake-up call. It's going to be a wake-up call for the industry, but the investor won't have a choice. They will have to swallow that loss. They will have to swallow that low return and go back. It doesn't mean that it will burn the opportunity of investing in private rental, short-term rental at all. It will just mean that there will be increased attention on the valuation at which you're investing in the company. So I'm still bullish on the level of activity we'll see in the coming years, but it will continue to be a buyer's market. So buyers who have the means to acquire, they will be the ones making the prices.
Thank you. I'll turn first to John, and then Philip, I can see your hands up, so I'll turn to you after John. John, if you could follow up there.
So I think there's a couple of things that Morgan said there that are worth double clicking on. The first is the shift in valuation. Listen, when Sykes did their last deal with Vitruvian, it was, I think, around about an 18 times EBITDA deal. That was sort of, I mean, if that's actually before the market got out of hand with Vacasa and Inspirato in North America, and some of the crazy stuff that happened during the SPAC period. But the narrative there was, hey, we Sykes have 100 developers on staff. We built all this technology in-house. Value us like a tech company, or really a tech-enabled story. And that's what they got, back several years ago. The maturity, though, of the actual tech vendors 5-6 years ago was not what it is today. You didn't have, you had much smaller platforms like the Guesses of the world, right? They were not, close to 100 million ARR businesses with really built out tech stacks. Same thing with TravelNet. Same thing with companies like Beyond on the RMS side. So you didn't have that. So you needed to approach this as a tech-enabled story on the opco side. I think now that the technology lives largely outside of the management companies, there's less of an ability for investors to pay a tech type multiple for tech-enabled management companies. That's not to say that if you have built, a proprietary tech stack, that you can't drive significant value from an operations perspective. But I don't think that you're going to get paid a software premium for that. So, where are we going from here? I mean, I think I'm, the other piece of the story is, you've seen the size of the vacation rental, the short-term rental market, however you want to slice it. Basically, in North America, it's basically doubled since 2019. It's grown by, north of 60% in the rest of the world over that same period. So while you are seeing a meaningful pullback, you're seeing ADRs off, anywhere from like 20% from peak levels in Europe and 15% or so in the United States. You still have a very healthy market that is still growing significantly faster than the traditional hospitality market. So while I don't think Sykes trades at anywhere near the multiple that it traded at previously. It's a business that has scaled significantly, and I think there's a lot of juice in that business for the existing investors to have a very good outcome. And my guess is, the off-taker is larger private equity.
Thank you, John. Philip, I know you had your hand up. Do you want to come in there?
Yeah, I mean, I think the interesting part is obviously if you look at the valuation, there's always the relative value and the absolute value, and your absolute value ultimately depends on the growth, and then the relative value depends on how much growth are you predicting for a certain platform over a period of time. And I think the challenge and the difficulty is, how are these growth expectations being met, especially in the current market, where funding has become more expensive, where people arguably have become more sensible in the way they deploy cash and make cash allocations available. I think the second part that's quite interesting is, especially for us, because we consider ourselves a tech company that's good at hospitality, or a hospitality company that's just very good at tech. In reality, besides the tech stack, we're probably a very, very boring bread and butter hospitality business, running hotels across Europe. And ultimately, I think the goal that we have, and we've been very successful at this so far, is that every single operation that we're taking on is net cash flow positive. And I think that's a little bit the beauty of the business that we're in, that on the one hand, we're combining the growth and the ability to use a platform to grow the operating business that we have through technology, but at the same time, we're underwriting something very real, which is hospitality properties across Europe, which tends to be, if you do it right, a very profitable business.
Thank you, Philip. Before we move on to my next question, and we will be talking about private equity with our investors very shortly, I want to bring up a poll that we ran on LinkedIn, just for a bit of fun, really, but it's going to relate to my final question to our panelists at the end. And it was, which type of short-term rental companies are most ripe for acquisition right now? Results may or may not surprise you. We had 62% opting for property management companies or operators, 21% for tech vendors, e.g. software, AI. Richard might have something to say about that. 17% for booking platforms and OTAs, and then 0% for other or different suppliers. But quite a mixed set of responses there. But we will hear from our panel very shortly on how they would be spending $100 million if they had that to.
Can I just jump in, Paul? I know you said we can ask questions, but I love asking questions to the other people here too. So I've been helping people grow their businesses and sell their businesses, and essentially what we might call small managers. And we have like 150,000 managers, and probably 60,000 have got more than 50 properties worldwide. I'm just interested to know, because you want to have managers listening right now who have been mushrooms, and maybe they got 80 properties, maybe they got 40, maybe they got 300. From what I'm seeing, I'm only seeing interest when this number of properties gets up to like 250. And obviously got to be profitable, quality properties, some form of maturity attached to them. The tech stack is of absolutely no interest at all, because you're not going to pay for a tech stack when you're already running one. So I'm kind of curious. I think Morgan's probably got a good view on this as well, in terms of what size of manager, because I'm constantly being asked, how many properties should I have to make a sale? And I always say, you're probably best starting at 300. But I'll be interested to hear what Morgan's got to say anyway.
Thank you. We'll let Morgan come back to this, because I do want to make sure we've got time for some audience questions as well. But we will definitely return to that question. Thank you, Richard. Before we go to some audience questions, though, Morgan, do you see, from like a private equity perspective, do you think we're going to see more private equity firms eyeing up the short-term rental or wider hospitality space? Do you maybe see space for other players to enter the sector as well?
Yeah, I think we'll continue to see those type of transactions, but again, at different multiples than the ones we've experienced over the last years. So to Richard's point, I think there's no magic number. Obviously, I'd say the bigger the better. But I think if you have a very specific geographical exposure to a certain area with a well managed business, most of the time family business, with unique inventory, or I would say semi-exclusivity or exclusivity to some of the inventories, you will find a buyer, whether it's at the mountain area or beachside area or urban. Yeah, there will continue to be a lot of these, small to mid-sized deals. The large deals will continue to see some, but I think if you looked at the recent acquisition of Oyo, Check My Guess by Oyo, it thinks, you will see some of these large operators trying to consolidate their inventory through the acquisition of large local players, like Check My Guess was. But the question will remain about valuation at which this is being done. So we've heard many different numbers, but when you look more closely at the valuation that was paid upfront, this is a very reasonable price. I think the big upside can come in the coming years with performance based on the integration of Check My Guess with Oyo. So long answer to your question, but yes, we'll see some. And I'm right now involved into a buy and build strategy in the short-term rental space in Europe, and I'm getting very good traction. But I never oversold the valuation I could reach to my clients. I think it's really important to have the eyes wide open on what you can expect. But once you have a good basis for discussion, I think it will be there's a path for a number of platform investments. But again, the starting point is going to be valuation.
Fantastic. Let's get to some audience questions. We've got plenty coming in, and then I'm really looking forward to hearing how our panelists would spend 100 million if they had that available. We had our first question from Kathy, and it said to the first speaker, I think that was Richard. So Kathy's question, Richard, was, when you say top PMS, which do you consider the top PMS software?
I'm not going to answer that question because it's got me in so much trouble so often. The answer to that is the best PMS for you is the one that most suits your business model. And as there are thousands of different business models, then you need to find the one that actually suits you best. I did actually write a 28-page document on choosing your best PMS, which is available. I'll send it to you, Paul. But there's a lot. That's no, just give me the email address and I'll write a very long answer.
I just saw Kathy's response, like wine. That's a very good, very good response there. We had a question from an anonymous attendee. What is the best size / unit count for a PM to get acquired? I don't know if one of our panelists wants to come in there. I don't know who that's best suited for.
I think Morgan just covered quite a lot of that, actually. You know, hotspotting, profit, maturity. I mean, there's a lot of little businesses for sale in the 30, 40, 50s, and I don't see them moving. But the ones in the 300 plus, I do see moving. And the ones between the 100 and 250 have interest. So, you know.
That's a good summary. That's a good summary from Richard. I think this is below 100, you know, very hard. Above 100, more likely. Above 300, yeah, good, better zone.
I think you see an inflection point on multiple too. Like as you scale larger and as you're multi-location, you start to get closer to double digits of EBITDA. If you're single, you know, location with, you know, below 200 properties, then you're talking about, usually you're talking about around about 5 times type multiple businesses, plus or minus, depending on how the businesses are operated, at least based on what we're, you know, what we're seeing.
A question from Vinayak Martani, an operator based out of Dubai and highly tech enabled. You might be able to see the rest of the question now, so I'll speed through it. How do you raise funds for these kind of acquisitions operating on higher gross margins than competitors? Does John or Morgan feel equipped to answer that?
I can take a stab. I mean, I think it really depends on how high the gross margins are. You know, like the gross margin for a SaaS company, you'd expect a mature SaaS company to end somewhere in the 90s. You know, yeah, there's a lower level as you scale up. So if you're raising and your margin profile looks like that, then you've got one story versus if you're talking about, you know, gross margins in the 50s. And so it really hinges on whether or not the story that you're telling is technology first, and you happen to have operations, or you have operations and you have technology that support the operations. And those have two, I think, very different multiple profiles in terms of where you'd raise at today.
I'll stick with you because I want to make sure we've got time to quickly run through how you would spend $100 million if you had it right now. How would you be spending it? Where would you be spending it, John?
Oh, man. To me, the most interesting parts of the STR market are the seam between STR and hotels. So technologies that are well positioned to serve both, you know, scaled up property management companies and traditional, you know, or, you know, sort of long tail traditional hotel markets. If you look at where you're seeing the most growth from hotel tech companies, there are tech companies that are serving the long tail. So the long tail of one market, I think, pretty neatly crosses over to being the large end of the other market. That's where I think I would be investing my dollars, and specifically where I think the most, you know, the biggest returns are going to be are within the MarTech / marketing stack. PMSs right now are trading for astronomical multiples, you know, sort of, you know, double-digit multiples for companies that are not growing all that, you know, all that fast. You're seeing more marketing-focused solutions trade significantly inside of those multiples, and they have much better growth prospects going forward at not much of a delta on retention. So my guess is investment dollars over the next couple of years flow more and more in the direction of revenue management, marketing, all things that help drive and optimize the top of the funnel.
Thank you, John. We'll squeeze in Morgan, please, if you can also give your thoughts.
Yeah, so I've got many ideas to spend money, and this is mostly derived from the mandates I'm advising on. So sometimes there's a bit of bias. So of course, the revenue management part and the marketing part that John mentioned is a very high interest. But I'd say there's still a very decent, sizable supply business in the short-term rental. So I would continue to build a platform. The difficulty being finding the right cornerstone investment. You need to find the right, a sizable company that's already operating in a few countries in Europe of a decent size. So that's the difficulty. But there are still room for making money and spending money in that space, and that includes short-term rental and camping as well. There's still a lot of things to do in camping as well.
Absolutely. I want to say a huge thank you to Morgan, to John, to Richard, and to Philippe for some excellent answers, and hopefully we've provided you with some of the insights and contributions you're all looking for today. We've had some other really good questions come through, but we've sort of run out of time to answer them. What I will say is our speakers will still be around for the next couple of minutes, and we've got a few slides to run through now. So perhaps we can answer that in live chat to our speakers. So a big thank you to all of our speakers today. Our next regular series webinar is on Tuesday, the 17th of September. And it's on the one key to unlocking loyalty in the vacation rental industry. It's in partnership with Verbo, and the sign-up link is in the chat now. You can also check out all of the recordings for our previous webinars covering a whole range of different topics via the link in the chat, and you can see it on the screen now. We're gearing up for our in-person Urban Living Festival event in just a couple of weeks' time, 2 weeks' time, in fact, on the 18th and 19th of September. The event spans the whole travel, hospitality, and real estate spectrum. And for the first time, we also had a dedicated short-term rental strand as well. So it would be fantastic to see lots of you there in London. Do go ahead and book your tickets now. For opportunities to work with us, please do contact my colleague Sam, our new head of growth at Short Term Rentals, using his details on screen. And please do get in touch about anything in-person events, digital content, be that webinars or podcasts. The session, as I mentioned, is going to stay open for just another 2 minutes. If you want to copy down anything in the chat, ask our speakers any more questions. Finally, I want to say a big thank you to Key Data and Logify for sponsoring the webinar and our series. Thank you again to all of our speakers and to everyone for tuning in today, and we'll see you all again very soon. Thank you very much, everyone.
Hello, we are International Hospitality Media, or IHM for short. IHM is the #1 brand to engage with decision makers in hospitality and real estate. Our 4 multimedia brands lead their respective sectors with breaking news, comments, trends, and opinions across a variety of multimedia solutions. We provide an inspirational community to connect people through world-class events, webinars, podcasts, award schemes, and much more. But let us share our story of who we are and what we do. Over 10 years ago, Piers and George had a light bulb moment to provide expert opinion, comments, and low-cost digital content. And so, they went on a journey over the past decade, creating media platforms to serve the hospitality and real estate industries. We now have an engaged audience with a reach of over 60,000 monthly visitors across our website, 52,500 in our email database across all sectors, and over 68,000 across our social channels. Everything we do challenges the status quo. We believe in thinking differently. We make things simple and very easy to work with us, and we're a friendly bunch too. We offer creative solutions to help you achieve your business goals. Read, watch, listen, and meet with IHM. Connect with us for a chat today. Just look at some of the brands we have worked with recently.